While it's risky to invest right now because of economic uncertainty, wars, and rates hike to control inflation, one strategy is to buy and hold for a very long time. So, in this video, we'll discuss 5 best stocks to buy now and hold in 2022 and beyond to beat inflation. We will discuss the most important numbers and why they are wise long-term investments. For full disclosure, I do not own any of this. The information presented here is for educational purpose only. Please do your own research before investing. Okay, let's get into it. Number 5. Procter & Gamble. Ticker symbol PG. Procter & Gamble is an American multinational consumer goods corporation known for its popular household goods such as soap, toothpaste, toilet paper, laundry detergent, razors, etc. Procter & Gamble's share price is trading at $125 right now, which is slightly higher than the 52-week low of $122.18. The 52-week high was $165.35. Procter & Gamble pays a really good dividend yield of 2.79% and have a market valuation of $292 billion. It has a PE ratio of 24.09 and earnings per share of $5.81. The price-to-book ratio is 6.52 and a 5-year projected PEG ratio of 3.72. With a current profit margin of 18.38% and a solid return on equity of 31.64%, Procter & Gamble has generated revenues of $80.19 billion over the past 12 months and has $7.21 billion in cash overall and a current ratio of 0.65. Procter & Gamble is rated by analysts as 2.4. which means it is somewhere between a buy and a hold. The average analyst price objective is $156.29. Since the market is currently in an unsettled state, investors are likely inclined to favor more reliable stocks than riskier growth businesses. Procter & Gamble reported a year-over-year net income gain of 3.04%. This is a notable improvement in profits and unquestionably a bright sign for Procter & Gamble's current viability. The company also stated that higher product prices made up for a drop in sales volume caused by pandemic-related lockdowns in China and reduced operations in Russia. Instead of riskier growth, Procter & Gamble places a stronger emphasis on value accumulation. Its longevity and dependability testify to its worth as a stock that you should, at the very least, be monitoring. Make sure you watch to the end of the video to understand why these stocks are the best to buy now. Number 4. Walmart. Ticker symbol WMT. Walmart is an American multinational retailer with grocery stores, supermarkets, and inexpensive department stores all over the world. The price of one Walmart share is currently $130 with a 52-week low of $117.27 and a 52-week high of $160.77. Walmart has a market valuation of $359 billion, a PE ratio of 26.46, earnings per share of $5, and a 1.68% dividend. The price-to-book ratio of 4.63 and a 5-year expected PEG ratio of 3.39. The return on equity is 16.2% and the profit margin is 2.36%. Its overall cash is $13.92 billion with a current ratio of 0.84. Their 44.4% dividend payout ratio is still a healthy level. The average analyst price objective is around $147. It is rated as a 2, indicating that it is a buy. Walmart has handled the inflation crisis like a pro by using this moment of rising prices as an opportunity for Walmart subscribers to receive even greater savings through Walmart Rewards. And right now, Walmart is continuing to build new facilities and grow its store network despite the uncertain economic climate. Walmart recently constructed its largest facility in Pennsylvania, a 1.8 million square foot distribution center. The firm has plans to open additional centers in the state as well, including a consolidation center, so the boom is not yet over. Walmart released its financial results for the second quarter of the fiscal year 2023. Total revenue increased by 8.4% to $152.9 billion, and the company saw growth in the same-store sales at its international facilities, on its e-commerce sites, and in its Walmart and Sam's Club stores. Number 3. Apple. Ticker symbol AAPL. Apple is an American multinational tech company known for its smartphones, tablets, computers, and operating systems. Apple is currently traded at $138 per share, with a 52-week low of $129.04 and a 52-week high of $182.94. Apple, the largest company in the world, has a market valuation of $2.3 trillion. Its PE ratio is 23.63 and earnings per share is 6.05. Apple is currently paying a dividend yield of 0.62%. The price-to-book ratio is 39.55 and a 5-year expected PEG ratio is 2.56. When we look at their balance sheet, we can see that they are holding on to a total of $48.23 billion in cash and have a current ratio of 0.87. They have a profit margin of 25.71% and a return equity of 162.82%. These statistics are very impressive. The dividend payout ratio is 14.71%, which is a very healthy level. The average analyst price objective for Apple is $184. Analysts rate Apple as a 1.9, indicating that it is a buy. Number 2. Tesla. Ticker symbol TSLA. The American multinational auto and technology corporation specializes in the production of electric vehicles. Tesla is currently trading at $205 per share, with a 52-week low of $204.16 and a 52-week high of $414.50. Tesla has a market cap of $642 billion, a PE ratio of 74, and earnings per share of 2.83. If you look at their valuation metrics, we can see that they have a price-to-book ratio of 17.66 and a 5-year expected PEG ratio of 1.58. Its profit margin is 14.17%, and the return on equity is 29.89%. Tesla earned $67.17 billion in income over the past year. The current ratio of 1.43 and total cash of $18.92 billion. Currently, the average analyst price objective is $306.10. On a scale of 1 to 5, 1 being a strong buy and 5 being a sell, analysts are rating Tesla as a 2.3, indicating that it is between a buy and hold. Number 1. Vanguard SP 500, ticker symbol VOO. This is an exchange-traded fund or ETF that holds the top 500 US corporations. It is not a specific company. One share of VOO is currently trading at a price of $328, with a 52-week low of $319.87 and 52-week high of $441.26. This ETF's net assets are approximately $754 billion, a yield of 1.77%, and the average PE ratio is 12.42. The best part about VOO, which is designated as a large mix exchange-traded fund, is that its net expense ratio is only between 0.03% and 0.04%. Consequently, You are effectively paying very little fees to hold an exchange-traded fund. The 10-year average return is 12.03%. You can see from the total return chart history that the value has increased since the fund started in 2010. I think ETF such as Vanguard SP 500 is a great investment buy and hold strategy. This is a minimal stress approach and better diversification. If I want to choose individual companies, I would try to keep it to a smaller portion of my portfolio. Invest in ETFs for the long term and forget about it will allow me the time to focus on developing my business and finding new revenue streams. So, those are my top buy and hold to beat inflation. It can be difficult to invest at the moment, especially given the state of the economy. But if you keep your eyes on the big picture and choose long-term investments like EFTs such as Vanguard SP 500, you should see strong returns over the next 5 to 10 years. Thanks for watching to this point. The reason these are good to buy now is because these assets have been beaten down so much over the last year due to economic uncertainties. But these are strong assets and they will likely bounce significantly when the bull returns. If you learned something valuable, please make sure to like, subscribe, and hit the notification bell for more contents like this. You can check out more videos on the channel and share. See you in the next one.